Good morning, traders, or good day, I should say. It is Monday, the 27th of August, 2018. It's 8:03 a.m. Chicago time, 9:03 Eastern U.S. time. Thanks for joining me again for another Trader Bite. All-time highs in the S&P 500 overnight. So a lot to talk about here. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Risk on, risk on, risk on is the sentiment today. The DAX is up 83 points, 0.67%. The Dow is up 142 points already, 55 basis points on the day. The NASDAQ's up 36.5, about 49.50 basis points on the day. The laggard today is the Bund, down 39 ticks, 0.24% down, and the bonds are down 6 ticks, with the Treasury notes only down a tick. So it looks like risk on. Crude oil's unched on the day, still trading 68.73. As I said, looks like risk on, and but it's not, it's significant, but it's not, some crazy amount. So that's how we're setting up this morning. Hopefully you can hear me well. Looking at what could drive us today in terms of news releases. Not seeing much on the calendar. The Germans had some important releases overnight: import prices, retail sales, the IFO business climate's a key figure. Looking ahead, we just have some auctions. For the week, however, we do have a busy week. Tomorrow, advanced goods, S&P Schiller, Case-Shiller, consumer confidence. Wednesday, sorry, I'm cutting out. Wednesday, we have U.S. core PCE, GDP, pending home sales. Thursday, CPI in Germany and U.S. personal income, PCE core, and jobless claims. Friday, we have Chicago PMI, University of Michigan, and some Fed ECB speakers. So overall, it's likely to be a busy week. Also, it's the last week before Labor Day here in the U.S., which ends the summer holidays. And that brings the trade back to what we would consider to be normal. So it takes a couple of weeks into September for all participation to return to normal. And so this week is going into a holiday weekend. So what that means is caution into the end of the week. Let's move on to what was expected on. Let's look at what we expected on Friday. Here's the plan for Friday. The key scenario for Friday, the first scenario, the primary, is for consolidation, a potential pullback to the 28.58 point of control. But the ultimate goal on Friday is 28.77, as you can see up here. 1 second. I'm back in Chicago, so there are a lot of adjustments to make when I'm back to my normal workstation. So here's the 2877, the top on scenario 1. That's exactly the high on Friday. The high on Friday was 28.77 and a quarter. That stock zone was put in there, has been there for several months actually, and that's where we stopped yesterday. Now, is there a crystal ball? Should I take out a whole page ad on the Wall Street Journal to say that I expected 28.77? We got 28.77 and a quarter. No, it's really random. I expect some sort of a reaction at my stock zones, but I really would be fooling you and lying if I said that I expect the market to turn right there. This is why I use wider stops. I don't expect the market to turn in areas that I predict, but those are the areas that I engage with. These stock zones that you see up and down the screen here, these stock zones are areas, pre-designated areas where I plan to do business. And it just happened to hold 28.77. It could have stopped just short of it or whatever. But that was the primary scenario. Here's what actually happened. There was no pullback on the S&P. The expectation is it would pull back, consolidate, then push into 28.77. What we ended up doing is getting a very lazy open on Friday. It was really awful. We poked the opening swing low a couple times, and then we saw our first burst, and that's really what matters. How are the rotations expanding? Which side are the rotations expanding on? And as you can see here, they're expanding to the buy side. We're pushing towards the prior day's high at 28.6975. We missed it by 2 ticks right here. Pull back, consolidate in the opening swing, and then finally we get our first real indication the buyers are in control. We see an impulse move, 10 points. That's pretty big, with Delta following suit. And so we're looking for the pullback. The pullback in this situation would be looking for a pre-identified area or the mid of the swing or some other thing. You could be a moving average for you, crossover or something. It doesn't matter. But once we get the impulse, the rifle is locked and loaded, and we're ready to unlock and pull the trigger on the pullback. For me, the pullback is into the stock zone with the mid beneath it, with the IB beneath it. This area here was a prime area for action. Okay, and that brings us into the extension move, the continuation move. So from the 28.70 area, I'm expecting at least 28.74.75, pulls up to 74.50, misses by a tick, comes back, and then it finally pushes through, and it ultimately puts in a top at 28.77, and we go sideways. Friday's profile is a double distribution profile with the point of control at the high. The auction closes at highs. So this, what does this say to us? This says that the market could not find sellers at this point. In order for it to find sellers, what does it have to do? It has to continue. It is most likely, I should say, to continue higher, to advertise higher prices, to bring sellers in, which means that on the reopen, we expect the market to push this 28.77 high, which it sure did. The overnight low was the close at 28.76. The market never looked back once it opened in the overnight session. So very systematic approach there. Here it is. We open, we test down to the prior session close, and immediately we have a push up, and the market just sits on top of the mid. The mid is this blue line right here, sits on top of the mid all morning with what is a kind of a weird P-shaped profile, squeezing shorts. This is just shorts lifting, most likely. Okay, volume in the overnight session, given that we're in a rally, is in line with expectations of about 100 to 110,000 contracts recently. Volume is right in line with that, so there's pretty decent participation, so we expect this to carry over today. Before we move on, it is really important to take a moment and see what we've done. And who's done a good job. And so here's where we were at the beginning of the year. There it is, January 26th. We put in a high of 28.84. We gapped down. Just 2 days later, the 29th, 2 trading days later, the 29th, we gapped down. And then we traded sideways in a consolidation. Then we gapped down even farther after that. And then we had this big sell-off at the beginning of February. We pushed all the way down to 25.39, pushed all the way up to 28.11, pushed all the way down to 25.55, and then consolidated and filled in this big area here. And then, as I'd been talking about, if you've been watching over the last week or two, probably 2 weeks, given the action that's taking place, this 28.84 is in jeopardy. We are very likely to take it out, and here we are. I actually expected this to happen a little bit earlier. It took its time. There was quite a bit of negative news, political news, and so on. But here we are. The market's actually getting to where it needs to retest the highs, where it's trying to retest the high with a very strong profile from Friday to feed that. So that's the situation we're in. What are we looking for today? Let's clean this up. Since we're trading in an area that has not ever been traded before, I switch over and I start to look at measured moves. The key measured move up is 28.93. Beyond there, 28.97 and a quarter. Those are the next two key areas. Those are the stock zones that I have right now. As we stand right at this moment, we are in a gap up situation into new all-time high territories. Very important to recognize that there are high odds of an OTF or a higher time frame participation here. So many participants who are looking at higher time frames are likely to participate. There's a lot that can go on here with the futures and new all-time highs. So as people come in, there's likely to be big movement today. So what I'm saying is new all-time highs, out of balance, with a gap. What that invites is a strong potential for an open drive in one direction or another, depending on what the market temperament is or what the participants want to do. And so you have to be cautious at the very open, as things might look frantic, okay? The expectation is an open auction. Out of range, actually, I'm expecting wide swings on the open auction. I'm looking for to test down into 28.84. I'm looking for a bounce, and I'm looking for to push up to 28.93. I expect the ranges to start to tighten up. I expect volume to start to tighten up as we push higher, but I'm also expecting a gap to remain open, this gap zone to remain open today. So that's the main idea. Consolidate, push up. Now, the way I'm trading this, the way I'm looking at my levels, my stock zones and stuff, I'm taking everything with a big boulder of salt rather than a grain of salt, because there's no prior auction that validates or invalidates any of these ideas. So being an auction-based trader, I have to rely more on scalping skills to build positions, to read the market. So just be careful going with, trying to use things like stock zones to predict consolidations, because there was no consolidation there before, because we've never traded there before. The alternative is an open auction that pushes up, fails, gives us an impulse down, consolidates back down to 28.84, the prior high, attempts to hold higher, and then starts to move, and we get the response, the big response back into 28.77. It could push as far down as 28.74, so it could continue lower. 28.74, that's the secondary, and these may open slow, but they may see some driving behavior. As I said, higher probability of driving behavior today because the market's out of balance. There's a lot of business to be done today by the higher time frame. There's a lot of hedging, positioning, covering, whatever that's likely to be done today. So be cautious. Scenario 3 is an open drive up. Scenario 3 is a market that just finds that prices are still cheap and then drives directly upwards and starts moving towards 2,900 above, which is a big magnet. And then scenario 4 is the opposite, is a market that sees prices too expensive. Let's pick a color. Let's make it light blue. That sees prices that are too expensive and then starts to open drive lower and bringing the market back into balance. That would be 4. I know it seems like I've covered all angles, and how could I be wrong by pointing things up and then down and then up and down? Yes, the market could go up and could go down, but just don't forget, my purpose as a trader is not to be right. That's not the goal. The goal is not to draw a line and then see if the market follows it like it did on Friday. My goal is to be ready to take any one of these scenarios and to have a plan, a prediction that allows me to hold on to a trade once I get in. Because for most people, the biggest problem is not doing the homework, not coming up with a plan, not coming up with some sort of an edge. The biggest problem for most traders is execution, right? Is execution and holding on to a trade. So you get traders who make all the effort, take the risk, but then take 2 ticks out of a trade because it came back, because they don't have a plan for that trade. And what you're seeing here with these scenarios is the plan with the trade. Good luck today, and I'll catch you tomorrow.